On June 12th, the biggest IPO in human history hits the Nasdaq. And the smartest money on Wall Street isn't buying it. SpaceX is going public at a $1.75 trillion valuation, the largest debut any company has ever attempted. Retail investors are scrambling to grab a piece. But here is what almost nobody is telling you. The company that just lost nearly $5 billion in a single quarter might not be the trade at all. The real opportunity could be a rocket stock you can actually buy today, plus a trap that could blow it up the moment SpaceX lists. Let's break down what's really happening before June 12th. Here is the setup. SpaceX is pricing on June 11th and listing June 12th on the Nasdaq under the ticker SPCX, selling roughly 555 million shares, near $135 apiece to raise about $75 billion. That makes it the largest IPO ever, by a wide margin. The valuation rests on two pillars. First, Starlink, which has crossed 10 million subscribers and is projected to pull in around $19 billion this year, close to 80% of SpaceX's revenue. Second, the recent merger with xAI, which fused Musk's rocket company and his AI company into a single empire that now wants to build data centers in orbit. On paper, it is a one-of-one business: rockets, satellites, and AI compute under one roof. Now the part the hype videos skip. At $1.75 trillion, SpaceX is trading at roughly 100 times its sales. That is richer than almost any mega cap on the market. And the profits. There aren't any. SpaceX posted a $4.9 billion net loss in the first quarter of 2026 alone. And it is sitting on an accumulated deficit north of $41 billion. Management has been blunt. The cash is not coming back to shareholders. Every dollar gets reinvested into Starship, a moon base, Mars, and orbital AI. So, you are not buying earnings. You are buying Elon's roadmap, which raises the question that splits this entire trade. Are you investing in a business, or are you buying a lottery ticket on one man's ambition? Even if you love the company, the IPO mechanics are stacked against you. 21 underwriting banks get paid their fee on this deal whether the stock goes up or down. The price will almost certainly spike on day one from pure fear of missing out, then chop sideways for weeks while it finds a base. Investors' business, Daly's own advice is to wait days or even weeks before touching a hot IPO. Meanwhile, the institutions get a forced tailwind you don't. At this valuation, SpaceX could command a 3.5% to 4% weighting in the S&P 500, making it an instant top 5 holding that index funds are required to buy. Translation: the early venture investors are selling, and retail buying at the open is often the exit liquidity. So if you can't buy the best company at a fair price, you buy the picks and shovels. That is Rocket Lab, ticker RKLB. It was founded by Peter Beck, a New Zealander who built rocket prototypes using the machinery at an appliance maker before he ever reached orbit. Today, Rocket Lab flies the Electron, the second most launched rocket in America, responsible for around 62% of all non-SpaceX US launches last year. But the bigger engine is Space Systems, where Rocket Lab builds the satellites themselves. That division is now about 2/3 of revenue. Total revenue hit roughly $436 million last year, up 78%. It is not profitable yet, but it is the only public pure play with the execution record to even stand in the same sentence as SpaceX. Here is the asymmetric piece. SpaceX is winding down the Falcon 9 to pour everything into Starship, which leaves the medium-lift launch market wide open. Rocket Lab's answer is Neutron, a reusable carbon composite rocket designed to put about 13,000 kilograms into low Earth orbit. with a clamshell, hungry hippo fairing, and a brand new Archimedes engine built for reuse. If Neutron flies on schedule, Rocket Lab steps into a launch market projected to more than double to $35 billion by 2030. The Bulls model that is an $80 billion company, 4 times today's value. That is the dream that drove the stock up 800% in a year. And now the contrarian gut punch this channel exists for. Every other video is screaming, buy Rocket Lab before the IPO. But Rocket Lab has gone parabolic. It now trades around 123 times sales, priced for absolute perfection. And the SpaceX IPO might not lift it. It could crush it. The reason is rotation. For 2 years, investors who wanted space exposure bought RKLB as a stand-in for SpaceX, because SpaceX was off limits. The moment the real thing trades, that proxy demand can reverse, sell the substitute, buy the original. The very event everyone assumes pumps Rocket Lab could be the one that drains it. Add a single Neutron launch failure or 1/4 of slipping timelines, and a 123 times multiple has a very long way to fall. So, strip the hype out completely. SpaceX is a generational company at a price that demands perfection and pays you nothing today. Rocket Lab is the cleanest way to own the space economy that you can actually click buy on. But it is expensive, unprofitable, and the IPO could trigger a violent shakeout before it ever reprices higher. The people who win this won't be the ones who chased the green candle on June 12th. They will be the ones who decided in advance what these businesses are actually worth and then waited for the market to panic and hand them the price. If this broke down the SpaceX IPO better than the hype reels flooding your feed, hit subscribe. This channel exists to tell you what Wall Street won't. And settle a debate for me in the comments. On June 12th, are you buying the $1.75 trillion dream, playing Rocket Lab as the proxy, or sitting on your hands waiting for the crash? I read every single one.